A 4-day working week is starting to look less like a dream and more like a real possibility, at least for some people. My name is Jack Reeves and welcome to this week's episode of Tax Tidbits, where trials have found that cutting the standard 5-day grind down to 4 can make employees happier, less stressed and surprisingly more productive, while also making it easier to attract and keep staff. Some teams even find they get more done in 4 focus days than they used to in 5, but it's all not a one-size-fits-all solution and may not be suitable for sectors like retail, hospitality and care, where reduced availability of professionals like doctors can negatively affect services and vulnerable people. While over 90% of organisations that trialled it have kept the model, wider adoption is still a long way down the line. The government is rolling out a new clearing style system to help people who miss out on their first choice apprenticeships find alternative opportunities, much like university clearing. The online platform will show available roles, potential earnings and long-term career prospects, making it easier for young people to figure out their next move without panicking. The pilot, supported by employers and local authorities, aims to give a second chance to those who just missed out while encouraging more young people to pursue apprenticeships. With £725 million in backing and companies like Centrica offering hundreds of spots, the plan is to create more apprenticeships and get most young people into higher level learning. Making Tax Digital for income tax is rolling out from April 2026, and its impact goes beyond UK residents, as it's throwing non-residents and overseas landlords into the mix too. UK taxpayers with qualifying income above certain thresholds must comply, but non-residents or those with foreign income face special rules. Only UK source income counts towards MTD thresholds, so your villa in Tuscany doesn't trigger MTD. Additionally, those without a national insurance number are automatically exempt from MTD and must report their income via a classic self-assessment where necessary. The bottom line is that MTD is nudging more people into a digital tax land, but figuring out the rules for non-UK income is a bit like assembling IKEA furniture. Possible, but you'll want to read the instructions carefully. Ford got hit harder than expected by tariffs last year, paying around $2 billion, double what it had planned, after a last-minute change to US tariff relief program cut the credits it could claim. The program is designed to help car companies counteract tariffs imposed under US President Donald Trump, allowing manufacturers that import parts for vehicles built in the US to claim credits. However, in December, government officials informed the company of a revised, later start date for the policy, which meant the credits provided less financial relief than expected. On top of that, the company took a $19.5 billion hit for scaling back plans for large electric vehicles because, well, people just weren't biting. That all ended up to an $11 billion loss in their fourth quarter. Despite all this, Ford's revenue beat expectations and executives are optimistic about 2026 profits as the company refocuses on hybrid, gas-powered cars and smaller EVs. The Bank of England has kept interest rates steadily at 3.75% after a narrow 5-4 vote, despite expectations of a cut. Governor Andrew Bailey highlighted slowing inflation, which is expected to hit the 2% target by spring, but also warned that rates won't return to the pandemic-era lows. Growth is looking a bit sluggish at 0.9% and unemployment is creeping up, so a rate cut later this year still seems likely. While mortgage borrowers may have been hoping for immediate relief, analysts now expect the first cut around April, with savers continuing to face low returns. Thank you so much for tuning into this week's episode of Tax Tidbits. Don't forget to give this video a thumbs up and hit the subscribe button to stay updated with all our videos. See you next time.